My life, it's like, oh my word, it's like getting in a new car that you've never driven before. You can't find anything. Apologies about all this. I am now on Anna's machine because for some bizarre reason, we can't swap screens. So just bear with me for a moment while,
And I've got lots of things at the bottom. I've got a record chart.
let's get that there. Okay, fine. All right, I don't know why these aren't linking either. Let's get that rid of that. Sorry. Let's link that. That on red. Put that on red. Okay. Put that on red. There we go. Okay. Get that down there. Right, now we're on. Isn't that ridiculous? Don't know what's going on this morning. Apologies. Right, I will try and do as best I can. Okay, we've gone pound yen now. Okay, let's get rid of that. Don't want the interval link. Don't want that. Don't want that. And don't want that. Right, let's go back to the YM. I had them all set up beautifully on mine, but there we go. Okay, let's pop this up full size. Where are we? Okay, let's make that the day. Okay, let's make that the, sorry. Let's make that 60 minute. There we go. Right, okay, let's just pop this up full size. This is on the YM. Just pull that out. I'll just pull that up so you can see the volume better. Okay, just to answer your question, Martin, sorry it's taken a long time to get here, but there we are. The issue we have yesterday, you may or may not be aware of this, but the futures market triggered the breakers on the system because the market fell so dramatically. I think it comes in about 7%. So in other words, there were no futures traded on Globex on the electronic markets from, I think it kicked in about 6 or 7 o'clock UK time, and it went all the way through to the following trading session. So for 6 or 7 hours, there was no trading on futures yesterday. We couldn't trade the futures markets until it opened at 1:30, just to complicate because US markets have, or the US has changed to daylight as well. So that shifted everything back an hour in the UK and everywhere else. So the reason I'm making the point is that if you look at the volume under here, this is not representative of what actually went on the day, because it's missing well over half the session. So if you're looking at this and wondering why there's this anomaly, that's the reason why. It's because we missed, as I say, half the session because the breakers break in. This is something that happens on pretty much all futures markets. There are percentages which kick in, which automatically cease all trading on the exchange. So just be aware of that when you're looking at it from a volume perspective. In terms of using the, just to answer your question, Martin, in terms of using the indices intraday, of course, the what they give you is a heads up in terms of intraday price action, and obviously the longer term as well. Just change it over to 5 minute, let's say. Okay. And in addition to that, not only would I have one, I have all three up. I have the YM, I have the ES, and I have the NQ. Not just for trading them per se, which we do all the time, but also to give us heads up on sentiment. Because Globex is a 24-hour market, it means you've got constant sentiment flowing through the market. It'll give you a heads up. We had this really nice example came in as we were fiddling about just now, where we had the volatility triggered. So we get the volatility trigger, we get a sharp move to the downside, good volume under there. We know the volatility is triggered because we've got the volatility indicators triggered on it. What we're expecting is either congestion to build or a reversal. We had another nice example up here. Shoots up to the upside, lots of volume, everyone jumps in, and then they're crushed and the market reverses. That's the power of the indicator. It is so simple, it works on average true range. In terms of trading spot currencies or indeed any other market, when you're looking at these markets, they will give you a straight heads up on sentiment on an intraday basis. In addition to this, you should also have the VIX running somewhere, because again, that will give you a heads up in terms of options, in terms of sentiment, in terms of risk, everything. This market is, when you distill it down to the bare essentials, it is so simple. The principle of what is going on here is just very, very straightforward. It is simply about risk and reward. Higher risk, higher reward, lower risk, lower reward. And that's all the financial markets come down to. All the headlines, all the news, all the instruments, all the markets. That's it. It's money either chasing a safe haven or it's looking for a better return in higher risk asset classes. And that's all it's about. So if you have these charts up, I would say they are an absolute requirement. If you don't have them on the platform itself, although I have to say they are increasingly common on not just MT5, but also now on MT4. You'll find a lot of these indices on MT4. So if you're an out-and-out spot forex trader, fantastic. You'll find them there, MT4, MT5. We have them on NinjaTrader here. We have them on TradeStation, obviously, and everywhere else. But you'll also find them if you just want to get a heads up. You'll find them, as Anna said at the start of the show, on investing.com. You'll find them all there. It's all live data, and you'll find all the markets. In addition to that, you'll also find the bond markets there, because bond prices and bond yields will give you another ton of information about risk and reward. So what we're seeing right now is we're seeing a recovery. We're seeing an effort to rally. We had the trigger to the downside. We had the volatility trigger kicked in. The market reversed. We then had this very strong platform of support. It went through slightly, but it's still holding now in place. We've gone through the volume point of control here. We've gone through another very, very strong level here. This was a cluster of two where we had a thicker line and a slightly thinner line. And the thickness of these lines is the way the support and resistance indicator works on NinjaTrader, what we call the accumulation distribution indicator, is the line thickens according to the number of times that area has been tested and reheld. So in other words, the thicker the line, then the stronger is that area of support and resistance. And when they combine, as they do here, where it's been breached and they combine, then obviously we've got a very strong platform in there. We then start to look at the volume profile up on the volume point of control. What are we moving into here? We have a low volume node, so we should expect the market to push through there. It's not going to take a huge amount of effort because we have low volume sitting there. In other words, there's very little in the way of volume to hinder progress on the market. So you read this in context in many different ways. You read it in the context of sentiment. You read it in the context of price action in terms of volume, using the indicator in exactly the same way as you would if you were trading any other market, not just the YM as an index future per se. Now, I have absolutely no idea what workspaces are on here, so let's just have a quick look. Just go back to Forex. Or perhaps that was Forex. Let's have a look at that one. No, that was Forex. No, okay. Okay, well, we'll just change over on here. Let's just have a quick look at some of the yen pairs. Let's go and have a look at the Aussie yen. Excuse me, I'm just going to switch off a minute. I'm back again. Okay, and really just to reinforce the point, and this is really all it comes down to. I don't really need to look at, I can look at an index chart and pretty much know what's going on in terms of Forex. That's the reason you've seen this little rally developing, because you've seen it develop in terms of sentiment on the indices. It's all interrelated. All these markets are interrelated. Markets don't trade in isolation. If you're looking at this as an opportunity, what are we looking at now? Well, we're at the volume point of control. This is on 5 minute. So we expect the market to congest there purely because we've got a heap of volume. Excuse me a moment. So we're expecting the market to congest, and this is really what it's about. It's using the indicators, it's using VPA in trying to give you a heads up of what is likely to happen next. You're looking at charts in related markets, you're looking at price action in related markets, you're looking at volume in related markets, then you're looking at the indicators in the associated markets. You can see here we've got the trend monitor. It's transitioned through to blue. We didn't go to the darker blue, we've actually gone straight through into blue. So we've gone from red into darker red, which is the transitional phase. Now we're moving through into a bullish phase of price action. And the trend dots will always change first. We always strongly recommend you get both. If you're going to buy one, please get both, because the trend dots work very close to the price action. So you will see the change here first. And the trend monitor takes a more considered view of price action and therefore will change after the trend dots have changed color. We're now coming up to an area of potential resistance here, this red dash line, so that's pretty solid. If we get through that and on up to maybe 60, 68, 60, 65, then we're into the volume here is starting to fall away. So for further advancement, this is going to be much easier for the currency pair in terms of moving higher up the chart. But for the time being, we're at the volume point of control, and that's what we expect it to stay for the time being, because there is a ton of volume there, which is causing that to happen. Just to highlight what went on yesterday in terms of volume, and this is why, let's pull that up. We have absolutely extreme volume on the daily chart associated with extreme price action. There is an absolute ton and a half of buying coming into that candle yesterday. We highlighted it last night in the webinar there, and it really goes back to the point I was making on the other screen, which is sorry, it was on Anna's screen, but I was talking. Is about the daily time frame for the CSI. Remember, those commodity currencies very, very strongly oversold. The risk currencies very strongly overbought. That is all aligning with the volume profile from yesterday. It doesn't mean we're going to get a V-shaped rally, but boy, oh boy, you know, if you're going to buy, then it's looking at a buy for longer term, and for getting into a reversal in terms of obviously the yen-based currencies, and also in terms of equities rebounding, in terms of oil recovering, and in terms of gold probably coming off the highs it's seen, getting up to $1,700 an ounce yesterday and coming off that a little bit. Still very bullish on gold, lots of different reasons for that as well, and so on and so forth, really putting it all together. But that is just massive, massive volume. The same was true on New Zealand yen yesterday. Just bung that one in there, exactly the same. Just pull that up full size, make it easier to see. There we go. Absolute ton of volume, extreme volume. And what is this telling you? It's telling you there's massive, massive buying going on in that particular day. The markets plunge, they recover. It's the souffle effect. It gives the market makers an immense amount of volume to play with. They move in, they buy in sheer, as the panic selling ensues, they move in and buy. And now we're going to see this, I would say, almost certainly congest, and then we're going to see the reversal take shape. But obviously that's going to happen over a longer period. So going back to the daily time frame, you know, that is the time frame to look at. You'd certainly be looking at the heat map as well. But that's not to say there aren't, obviously there are loads of intraday trading opportunities, but from a longer term perspective, that is what is shaping up. And it's pretty similar to the flash crash we saw in January, I think it was last year, or maybe even late December, I can't remember now, about 14 months ago or so. Again, big volatility, snap move to the downside. Markets recover very quickly, ton and a half of volume coming in. We're seeing exactly the same thing. The one that isn't so dramatic is the Swiss yen, for obvious reasons, because you're dealing with two risk currencies. So, you know, if you were trading this yesterday, this would not have been the one to look at, although plenty of trading opportunities. And the reason it's more muted, you saw it on the currency strength indicator, you had the Swiss and the yen rising at the same rate. Which is what you would expect because they're both being bought as risk. And you see that reflected in the chart. It's not so dramatic. Yes, you've got extreme volume, but the actual price action is a lot less clear. It's more of a, I wouldn't say it's indecision, it's certainly not a doji, but you've got a lot of, you've got a deep wick to the top side and bottom side. So it's not as clear cut. It's not a massive hammer as we've got on the other platforms, but nevertheless, lots of buying of Swiss franc again. People moving, you know, they're still buying the Swiss franc in panic, if you will. It was just yesterday was so overweighted with the strength of the yen move that tended to dominate, and now this is reverting back to a more even pattern, if you will. Similar picture on pound yen. That wasn't so dramatic either. Pull that up on the daily. There we are. It's much the same as Swiss actually. So it's not so dramatic. So obviously the pairs I'd be concentrating on now are obviously the CAD yen, the Aussie yen, and the New Zealand yen. So that's it. I'm going to wrap up there. I'm sorry it's been a bit bitty today, and we've had to chop around all over the place. Yeah, Anna's just going to find the various sites because I'm completely at a loss now.
Very slow.
It is very slow. Believe it or not, we have fiber broadband
To the house.
straight to the house. We're now running at 300 meg download and 50 upload, which I have to say has been a great relief. This is the quantum trading site where you will find details of all the indicators. MetaTrader 4.5, that is one license. So if you buy the license for that one, you can use both platforms. NinjaTrader 7 and 8, again, same thing. And TradingView. TradeStation we're working on. Just to go back to what Anna mentioned about the currency matrix, we've already got that in test, working really nicely in terms of the numbers that are printed. What we've done is we've got an average print and an all-time high print. So what you'll see on the currency matrix is two numbers, which will give you a heads up and an instant view of where we are in terms of the extremes, or how far we've got to go and all the rest of it. So it's working really beautifully. Obviously, what we will do is we will, in due course, we will add that onto the various platforms. So that's an additional upgrade. You never pay for any upgrades. We're also working on some new indicators. We're working on some time and sales indicators on TradeStation, and we're also going to be working on some sentiment indicators for TradeStation. Again, they will be ported back. Yeah, time and sales, depth of market, in other words, and also in terms of sentiment. Both those, in fact, there's 2 or 3 in the pipeline. They will be available on the platforms, because when you buy the full package from us, you get all future indicators for free. It's just our way of saying thank you. You never pay for any support. You never pay anything else to us unless you want perhaps a second license on something, but other than that, it's all free. This is the education site on quantum trading education. You'll find all the details here. It's comprehensive, would not really do the program justice. We consider it the gold standard. You have 5 core modules there of psychology, fundamental, relational, technical, and mechanics. And then below that, we have a heap of other stuff as well. You've got VPA chart examples, how to use the indicators, pulling it all together, topic webinars, webinar library resources. I think in total there's something like 200, 250 hours of video in there. You obviously get all the tools and indicators as well. And you also get access to our VPA chat room, where you're more than welcome to interact with us. We're in there pretty much every day. And also your fellow students. I know we have some on the program, and that's growing all the time. So we're really delighted with that. And it's been very, very well received. There is a 7-day money back guarantee with it. We have yet to have anyone who's asked for a refund on that. So we are absolutely delighted. And as I say, the feedback has been just immense. So thank you for that. Apologies today being a bit choppy. If you have any questions, you're more than welcome to drop Anna a line, anna@annacooling.com, or you can get hold of me at david@quantumtrading.com, and we'll be happy to help there. If you have the tools and indicators, you need help with anything, just helpdesk@quantumtrading.com. So that's it, that's us done. We are going to run. Hope you've enjoyed today. Please trade safe. There's plenty of opportunities, and you know, whether you're an intraday trader or longer term, the opportunities are there. I hope we've highlighted that this morning at any rate. And just enjoy your trading. So that's it from us. Bye for now, and see you soon. And we'll send out details of the next one on the list, and we'll get those to you in due course. So thanks again for joining. We do appreciate you taking the time to come with us today, and hope you've enjoyed it. Hope you learned something that perhaps you didn't know before. See you soon, and bye for now.